Welcome to another Monday, August 24th. Scott Riley, the market update desk with Mortgage One, NMLS 157524. Tigers lost again for the weekend, got swept by the Royals, 7 games out of the division, and I think 5 games out of the last playoff spot. I think they're cooked and they're out, unfortunately. So today, I wanted to go over what's going on today, but also kind of tell you what's going to happen during the week as far as data and information coming out. Last week, if you remember, we had the end of the memorandum of understanding with Iran, sent yields higher on the concern of oil pressure with inflation. That coupled with the enormity of the amount of corporate bonds being issued to fund AI buildout put significant pressure on bond yields. As a counterpoint, to try to take some pressure off bond yields, Secretary Bessent indicated that they're going to start next month something they're calling another Operation Twist, where they're increasing the amount of bond buybacks by double the amount that they were doing. So that was really positive news until the next day, the end of the week, when the market absorbed what Bessent was saying and really questioned how it was going to be funded, and we lost the traction that we gained from the announcement of the bond buyback program. Now today, what Secretary Bessent came out and said is to fund the buyback program, he is looking to tap what's called the Treasury General Account. It's basically a checking account for the Treasury. That's sitting just a tick over $1 trillion right now in it. So the concern on how it was going to be funded, if it was going to be via the Fed or the Treasury, got answered. That did relieve, once again, some pressure on the bond market. Let's hope that it stays lower pressure and yields start to dissipate. It's just tough to forecast where this is all going to go right now. So the market opening up today, oil's down $1.84 to 85.22. It's really important we get into a 70 handle on that oil. I think that's going to go a long way to helping bond yields. Dow is up 126. Keep in mind that's on a kind of a flat week last week. 10-year Treasury is down 4.5 basis points to 4.692. We really need to look to get that sub 4.62, I think, to try to get some traction to get us on a lower trajectory. We keep bopping back and forth between 4.68 and 4.73 in Treasury yields. And if we can break down below that, that'd be the 25-day moving average. That'd do a lot for mortgage rates. Now, this week, the things to watch are going to be the PCE, inflation report, personal consumption expenditure. It's one of the Fed's favorite measure of inflation. We should see a fairly decent number because we saw a good CPI and PPI number. So this PCE number should come in at or below market expectations. The other big thing that's going to happen later this week is the annual Federal Reserve Symposium in Jackson Hole. That's where it's an international conference of economists coming together. There'll be multiple speeches. I don't think there'll be any significant announcements, but the tenor coming out of that symposium is going to be important to follow. We're staying on top of everything. Right now, it's a little slower time with market activity. For buyers, it might be this brief window of opportunity to get an offer accepted at maybe a little bit better terms than what you could have just 4 or 5 weeks ago. So windows of opportunity don't necessarily last a long time, so seize the option. Give us a call, 616-293-2189. We can help look at programs for you, see what we can put together and help you and your realtor partner get offers accepted. 616-293-2189, the Market Update Desk, your original singular market news source for West Michigan.